Hi and Assalamualaikum. My name is Muhammad Sharif Akif from the FAC3 and I am the group leader for this project. My group members is Muhammad Mukris and Muhammad Daniel Fahim. It was an honor for us to complete the project and to present the project to all of you. Without wasting any more time, let me briefly explain to all of you about manufacturing account. What is manufacturing account? A manufacturing business processes raw materials in a factory to create products for sale. Typically, the manufacturer sells these goods as finished products to a wholesaler or retailer or as partially finished products to another manufacturer. The purpose of preparing manufacturing account is to calculate production costs. It is sometimes prepared to indicate if the factory made a profit or a loss in manufacturing. The determination of manufacturing profit or loss will aid the manufacturer in determining whether or not to produce its own items. Now, I will share to all of you our background company. I will start off with the business activities. What is business activities? Business activities refers to any activity that a business engages in with the primary goal of profit. This is a broad phrase that refers to all of the company's economic actions in the course of doing business. The business activities that our business SDM Cookies will handle is the production of our chocolate chip cookies, which is the ingredients of baking the cookies, the maintenance of our assets such as machinery and ovens, and lastly, the overhead costs such as electricity, rent, and other utilities. Next, our vision and mission. What is vision and mission? A vision is a vivid mental image of what you want your business to be at some point in the future, based on your goals and aspirations. Having a vision will give your business a clear focus and can stop you heading in the wrong. Meanwhile, for mission is a concise explanation of the organization's reason for existence. It describes the organization's purpose and its overall intention. The mission statement supports the vision and serves to communicate purpose and direction to employees, customers, vendors, and other stakeholders. Our vision is to be committed to ensuring that the products we produce are of high quality and meet our customers' needs. And our mission is to be the top brand of cookies in the entirety of Malaysia. Last but not least, organizational chart. What is organizational chart? An organizational chart is a diagram that visually conveys a company's internal structure by detailing the roles, responsibilities, and relationship between individuals within an entity. Our organizational chart consists of three, which is president, baker, and cashier. Now let me proceed with the manufactured product. After doing a lot of research, we decided to do chocolate chip cookies as our product. As you guys can see, these are all the ingredients needed based on the Thermomix recipe, which is the Thermomix machine itself, salted butter, brown sugar, vanilla extract, free-range egg, plain flour and dark chocolate chips, and baking powder, including the price of each item so that we can create a high-quality product by using good materials but not that expensive to minimize our cost. Well, that is all from me. I will pass to Mukris for the next slide.
Identification all the costs involved. Necessary cost of raw materials. Cost of raw materials purchased can therefore be calculated as follows. Raw material purchase equal to ending inventory minus beginning inventory plus cost of goods. Direct labor. Direct labor is the cost of workers who are directly involved in the production of the finished good. This refers to the wages paid to those who work directly in the manufacturing process. For example, the baker and the cashier, and wages paid to machine operators. Direct expenses. Expenses incurred just for a single product. For example, rental of machinery, and royalties paid. Prime cost. The formula of prime cost is prime cost equal to direct material plus direct labor plus direct expenses. Indirect costs. Indirect costs are divided into three. For example, which is indirect material, indirect labor, and indirect expenses. For example, lighting and heating, power, depreciation of machinery, repairs and maintenance. Production cost. The formula of production cost is production cost equal to prime cost plus factory overhead. Work in progress is a term used to describe things that are partially made the calculation of an accounting period. Work in progress at the beginning and end of an accounting period must be adjusted in order to determine the cost of production on completed goods. Cost of completed goods, also known as cost of goods manufactured, refers to the total value of inventory that was produced during the accounting period and is ready for sale. Manufacturing profit. It also known as factory profit. Manufacturing profit rises when the cost of finished goods transferred to the statement of profit or loss include markup price. As you can see, example of production cost, manufacturing profit, cost of goods transfer, market value of completed good in our slide. Right, cost per unit. If given that we are able to produce 14 pieces at a time and it requires the following to make, we need to have 1 cup of butter, 1 free range egg, 2 cup of brown sugar, 1 teaspoon of vanilla extract, 1/2 teaspoon of baking soda, and 3 cups of flour and 200 grams of chocolate chip. Using the prices of the ingredients listed above, the cost per unit will equal to, as you can see, cost per unit for the ingredient. Right now, we will go to selling price. A markup 50% based on the cost will be imposed on the product, which means the selling price for a jar of chocolate chip cookies will amount to 60.20 ringgit. Alright, that's all from me. I will give it to Danny for him to present.
Hello, my name is Muhammad bin Fahim bin Muhammad Fauzi, and I will explain to you the financial accounts used for a project. The manufacturer account begins with a purchase of raw material, which is approximately 2,818 ringgit. By the end of the accounting period, we have a closing inventory of a raw material of about 704 ringgit and 50 cents. The cost of the raw material consumed would total to about 3,522 ringgit 50 cents. Adding the direct wages and direct expenses, which will amount to 5,500, the prime cost will equal to 9,022 ringgit and 50 cents. Adding the factory overhead expenses, which include rent, electricity, internet and telephone bills, insurance, repairs and maintenance for machinery, and a 10% depreciation rate on machinery will amount to a total factory overhead expenses of about 4,587 ringgit and 60 cents. Adding that with the prime cost, the total production cost will equal to about 13,610 ringgit and 10 cents. Minusing the closing work in progress, we would have of about 1,409. We would have a production cost of completed goods of about 12,201 and 10 cents. We imposed a 15% manufacturing profit, which will amount to about 1,830 ringgit and 17 cents. Now, finally, the cost of goods transfer will amount to 14,031 ringgit and 27 cents. Moving on to the statement of profit and loss and other comprehensive income, we begin our sales for the month would equal to about 16,200. We had a return inwards of about 162. So our net sales would equal to 16,038. The cost of goods sold would equal from a null opening inventory. Since we just purchased the raw material, that's why the opening inventory is 0. Adding the cost of goods transfer and minusing the closing inventory of the finished goods, the cost of goods sold will equal to about 12,622 and 27 cents. So minusing that with our net sales will equal to a gross profit of 3,415 and 73 cents. Adding the manufacturing profit and the revenue of a discount received will equal to 5,845 ringgit and 90 cents. Minusing the expenses, administrative expenses of rent, electricity, internet and telephone bills, and insurance, the selling and distribution expense of carriage outwards, as well as some bad debts, our total expenses will equal to 4,206. Minusing that with our previous gross profit will give us a net profit of 1,000 ringgit, 639 ringgit and 90 cents. Finally, we will move on to statement of financial position. The non-current asset of machinery had an accumulated depreciation of 1,437 and 60 cents. Minusing that, book value of machinery will equal to about 12,938 ringgit $1.40. Our current assets begin with inventory, which include finished goods, raw material, and work in progress. We had an allowance for unrealized profit to be about 624 ringgit and 50 cents. So our total inventory would equal to 4,851 ringgit and 50 cents. Adding some account receivables, the amount of money in our bank, and some prepaid rent, our current asset total will equal to about 8,601 and 50 cents. Next up, we are financed by a capital of 30,000 ringgit. Adding the net profit and minusing the drawings worth 1,000 ringgit will equal to about 20,639 ringgit and 90 cents. Adding current liabilities, which are account payables, and accrued electricity, which will amount to 900 ringgit, our accounts are fortunately balanced with an equal value of 31,539 ringgit and 90 cents. To conclude, what we can learn from manufacturing a product and creating the manufacturing accounts for the cost of manufacturing is a difficult but informative process that requires a lot of effort. In simpler terms, we were able to learn about some important terms that need to be understood when it comes to calculating the cost of production, such as direct costs, direct labor, direct expenses, and indirect costs. To produce a really successful product, it will take a lot of technique, move, or methods, and pour it all once according to a correct procedure. It begins with the type of product, the raw materials that we use to make the product, and the result of it becoming high quality that consumers will see and judge accordingly. It is important for us to make something that is high quality and using the good materials but not too expensive to minimize our costs. We are fortunate enough to be able to work on this project as we worked hard to create a possibly satisfactory product for the market and make the manufacturing accounts necessary. Thank you for watching. Goodbye.